All right, so the new iPhone is here, and I'm going to show you how to write it off 100% legally so that by the end of this video, you can save up to 37% on the cost of your new iPhone, or really any phone for that matter. And that's whether you bought the new iPhone already or thinking about buying it. And the best part about all of this is that you don't need to have an LLC and you don't have to wait years to see the benefit. All you really need to do is follow these 5 simple steps. But before the steps, let's first make sense of this word write off. You see, a write off is just an expense that you're allowed to subtract from your income before the IRS decides how much tax you owe. So here's how that plays out in real life using a simple example. Imagine you earn $80,000 this year. You buy an iPhone 17 for $1,200 and you use it for work. Now, instead of being taxed on 80,000, you're only taxed on $78,800. If you're in the 30% tax bracket, that single purchase cuts about $360 off your tax bill, meaning you really bought that phone for only $840 instead of the full price. So you want to think of this write-off like a coupon you apply at checkout, right? The iPhone still costs what it costs, but your total bill, your taxable income, drops. And once you get that point, the next big question is, does the iPhone actually count as a write-off? And you bet it does, but there's one test you have to pass first. You see, the IRS doesn't ask, do you have an LLC? They just want to make sure that the purchase is considered ordinary, necessary, and primarily for business. Ordinary meaning people in your field typically use it. Necessary meaning it makes your work easier or more effective. Primarily for business meaning the main reason you bought it is to use it for work. So, does the new iPhone check those boxes? Well, it depends on what you use it for. You see, for content creators, it's content, messaging, research. For real estate agents, it's calls, photos, video tours, listings. For consultants, it's Zoom calls, messaging, banking. For online sellers, it's ads, Shopify, and customer service. I think you get it. So if you're freelancing, coaching, driving Uber, selling on Etsy, your phone is a core tool for all of those things. And that's exactly what the IRS is looking for. But even if it qualifies, there's one thing that makes or breaks this deduction. And here's where most people slip up. They don't lose deductions because they weren't eligible. They lose them because they couldn't show proof. The IRS doesn't just take your word for it. They want a paper trail. So here's what to keep: the Apple receipt when you buy your phone, proof of payment, ideally from a business account or card, monthly bills, which show ongoing use. You want to think about documentation like the seatbelt in your car, right? You don't think about it most of the time, but if something happens, you'll be glad you had it. So here's a quick tip: create a digital tax folder on your computer or phone. And anytime you buy something for work, just drop the receipt in it. And that one habit can protect thousands in write offs for you. But the truth is that nobody, and I mean nobody, uses their phone only for work. And that's okay. You see, the IRS knows that. The trick is knowing how to split it fairly. The key here is being honest about how much of your phone you actually use for work. And the good news is the IRS is fine with that. So here's how you figure it out: track your calls, texts, and apps for a couple of weeks, or check your iPhone's built in usage stats. Let's say about 70% of what you do is work related. That means you can write off 70% of the phone and 70% of your phone plan. And here's what that looks like in practice: your phone costs $1,200. At 75% business use, that's $900 deductible. Phone plan, it's $100 a month. That's $1,200 per year. At 75% business use, another $900 write-off. So together, $1,800 deducted. And at 32% tax bracket, that's $576 in tax savings. And the best part here is that you don't have to wait years to take the deduction. Now, you might be wondering, how do I actually write this off? Or where do I actually put this on my taxes? Well, here's the good news. It's actually pretty straightforward. If you're self-employed or freelancing, you'll use what's called the Schedule C. You report your iPhone and plan under expenses. If you drive for Uber, DoorDash, or you have a side hustle with 1099 income, same thing. You use Schedule C to claim it. Now, if you run an LLC, an S Corp, a partnership, you'll categorize it as an office expense or a telephone expense on your business return. The key to this is that the deduction or write-off reduces your business income before taxes are calculated. It doesn't touch your W-2 job wages, but it can cut your tax bill tied to any self-employed or business income that you have. So when you upgrade, just keep the receipt, calculate the business use percentage, and plug it into the right line on your return. So good news, right? The tax system just gave you a discount for using the rules. But there are a few mistakes that can wipe out the benefit if you're not careful here. Mistake number one is claiming 100% business use when it's clearly not true. If that's your only phone, it raises red flags. Now, mistake number two is skipping receipts or proof of payment. No documentation equals no write-off. Mistake number three is thinking you need an LLC to qualify here. You don't. Income plus business use is enough. Mistake number four is forgetting the monthly plan. That counts too, not just the device. So the exciting thing here is that the iPhone 17 doesn't have to just be a shiny new upgrade. If you use it for work, it can also be a way to shrink your tax bill. And the steps are simple. Make sure your purchase passes the ordinary, necessary, and primarily business test. You want to keep documentation, split personal and business use honestly, and just take the write-off this year. Do that, and you'll walk away with the latest iPhone and the satisfaction of knowing it actually paid you back. And here's the principle I love to leave people with. Consumers buy things that cost them. Money savvy people, they buy things that pay them back. I hope you enjoyed the video. If you haven't already, go ahead and like the video, subscribe to the channel if you haven't. My name is Karan, and I'll see you in the next video.